In this video, I'm going to share with you an ETF you've probably never heard of, but you're going to wish you had. And that's because this ETF has been outperforming the S&P 500 ETF, stock symbol SPY, for the past 5 years. Hi stock hackers, I'm Jim Ray, and this is Simple Option Trading. It's where I share my stock investing and options trading strategies so that you can learn and earn more. Now I know a large portion of investors park a large portion of their retirement and wealth portfolio into basic index or index-related funds as a long-term strategy. Now this can make a lot of sense for most investors, probably 98%. But there's the other 2% that are looking for ways to extend their profits and build wealth faster. Now here's what I mean. The S&P 500 ETF, SPY, has a 5-year return rate of 72%. Not bad. But the ETF I want you to know about has a 5-year return of 73.8%. Even better. Now that 1.8% difference may not seem like a lot, but would you rather have it or not? Now if you're still watching this video, it's because you want to know the name and ticker symbol of the ETF I'm talking about. Well, here it is. It's the Wisdom Tree US Quality Dividend Growth Fund, symbol DGRW. Now before I get too deep, let me share some of the eye-opening profit numbers with you. Let me show you the annual returns for the S&P 500 ETF, stock symbol SPY. Here we can see a chart going back 1 year, and you can see the annual return over this 1 year time frame is 5.61%. Now moving over to a 3-year time frame, we can see that this ETF had a return of 38.41%. And over a 5-year time frame, this ETF has performed pretty well, giving a return of 72.09%. Well, now let's take a look at Wisdom Tree US Quality Dividend Growth Fund. Its 1-year return is 8.52%. It's got a 3-year return of 43.33% and a 5-year return of 73.87%. So as you can see, DGRW has outperformed SPY for the last 5 years. So the first thing I do whenever I start a trading session is I use my one-button stock screener to find potential stock option plays. Be sure to get my free one-button stock screener. It's the tool I use to help me pick stocks for option trades. Just sign up for my free newsletter at stockhacker.com and you'll receive a link to download my one-button stock screener for free. Next, let's do a quick high-level comparison between these two ETFs. So you can see I've got SPY listed first and DGRW listed on the second row. Now there's a significant difference in the price. The current price for SPY is $445.65, whereas DGRW, its current stock price is only $66.75. So that could make a difference in the number of shares you hold if you have a fixed account size. So let's say you have $1,000 available in your trading portfolio. That means you can only get 2 shares of ticker symbol SPY. Versus using that same $1,000, you could get almost 15 shares of DGRW. Now the expense ratio of DGRW is 3 times that of SPY. And a lot of folks may look at that and go, well, there's no way I'm going to invest in that. But take a minute and think about your situation and how it could affect whether or not you invest. So for example, SPY with a 0.09% expense ratio, that means you'll end up spending $9 for every $10,000 you have invested. In comparison, DGRW has a 0.28% expense ratio, which means you'll spend $28 for every $10,000 you have invested. So if your account has $10,000 worth of SPY, you'll end up spending $9 per year as the expense ratio or the management fee. In comparison, if you have $10,000 worth of DGRW, you'll end up spending $28 as the fee for managing that ETF. Now, depending on the size of your portfolio and what your goals are and the different returns, that $19 difference between the $9 expense ratio versus the $28 expense ratio may or may not make a difference to you. Here we can see the difference in the annual returns, 5.61% for SPY and 8.52% for DGRW. And let's not forget the dividend yield for each of these. So for SPY, the dividend yield is 1.46%, and for DGRW, it's 1.88%. So in the annual dividend yield, DGRW has been outperforming the SPY as well. While we're on the topic of dividend yield, let's see how Investopedia defines it. It says that the dividend yield is a financial ratio expressed as a percentage that shows how much a company pays out in dividends each year relative to its stock price. Now, the dividend yield is calculated by taking the annual dividend per share and dividing it by the price per share. Okay, so that was a pretty good technical and scientific definition. But what does it really mean to you and I as traders in terms of numbers? So here we can see stock symbol DGRW with its current price at $66.75. Now with an annual dividend yield of 1.88%, that equates to $1.26 per share. Now that I've showed you how much a shareholder can receive as a dividend payment for owning one share of DGRW, let's take a look at how a portfolio might be affected if the shareholder has more than one share. So I started off and you can see I have a shareholder that owns one share. Their current balance is $66.75, so that's the cost of the one share. They would receive a dividend payment of $1.26, and then their account balance after that year, after they received all the dividend payments, would be $68.01. Now if the shareholder owns 10 shares, their starting balance would be $667.50. The total dividend payments they would receive for the year would be $12.58, and their ending balance at the end of the year would be $680.08. Now, I'm not going to run through the rest of the numbers for you, but you can see how owning more shares equates to receiving a larger dividend payment, and as a result, the ending balance will grow as well. Now, keep in mind, this only reflects the dividend payments that the shareholder would receive. It does not include price appreciation, which could occur as well. One of the stock hacker tricks we tend to use is something called dividend reinvestment, sometimes referred to as DRIP, Dividend Reinvestment Plan. Basically, it means taking the dividend payments that you receive and automatically turning around and buying more shares of stock. One of the tricks that stock hackers use is taking those dividends that they receive and automatically turning around and investing in more shares of stock. They use that dividend payment to purchase more shares. And as an end result, by the end of the year, they end up owning more shares than they started with. Do you want to know what that looks like? Well, you're in luck. I just modified the existing spreadsheet. Let's take a look. So if a shareholder owned one share of stock and they use the dividend that they received, the $1.26 per share, they would be able to purchase 0.01 additional shares, so a fractional share added to their portfolio. So by the end of the year, they would now own 1.02 shares of stock. Now, if the shareholder owned 10 shares of stock, that $12.58 that they received as a dividend payment could be used to purchase additional shares of DGRW. And as their end result, instead of owning 10 shares, they would now own 10.19 shares. So as you can see, smaller portfolios don't show the gain nearly as well as someone who owns more shares of stock. Case in point, let's take a look at if a shareholder owns 500 shares of DGRW. Well, the total dividend they would receive, $628. And by using that money to reinvest and purchase more shares, their ending balance would be 509 shares of stock. So by using dividend reinvestment, it's a great way to grow your portfolio and accumulate more wealth. Here's a daily chart for ticker symbol DGRW. And I went ahead and plotted a trend line, and you can see that this stock is experiencing higher lows as well as some higher highs. This stock recently closed at $66.75 per share, and it looks to me to be in an oversold condition. So I'm anticipating that the stock price has some pressure to move even higher. Because of the oversold condition, I'm thinking about using this security to sell a covered call. So let's take a look at the option chain to see what the potential profit could be. So I'm going to press Trade DGRW Options, and I'm interested in selling a covered call. And let's go 1 month out. So I'm going to go September 15th, which is 33 days. We could see that the current price, $66.75. And the next available strike price is $67, which is currently paying 30 cents per share as the option premium. I went ahead and opened up my covered call analysis worksheet and plugged in the stock symbol DGRW to take a look at the profit potential. Here we can see the current date is August the 13th. I'm talking about stock symbol DGRW. And I specified an expiration date of September 15th of 2023. Now, we saw that the strike price was $67, and it was currently paying 30 cents per share as the premium payment. Now, I currently don't own any shares, but if I could get the shares at the last market price, which was $66.75, let's go ahead and plug those numbers in and see what happens. So here we could see the market price, $66.75, so that's going to be my cost basis, and I'm interested in selling one covered call option contract. So my total cost would be $6,675 in order for me to purchase those shares, and then I could turn around and leverage those shares to sell my covered call option. Now with an expiration date of September 15th, that would give this option contract a length of 33 days. Again, the strike price would be $67, and the premium I would receive would be 30 cents per share. Now, using my cost basis of $66.75, and if it were to sell at the strike price, that means my price appreciation would only be 25 cents per share, so not huge, making my total profit from price appreciation only $25. So that's the 25 cents times the 100 shares. Now, my income from the premium payment would be a total of $30. That's the 30 cents per share times the 100 shares, so that's how I get $30. And then my total profit then would be the $25 that I received in price appreciation plus the $30 from the premium payment. So on the expiration date, if my option contract actually gets exercised, I would recognize a total profit of $55. Be sure to get my free one-button stock screener. It's the tool I use to help me pick stocks for option trades. Just sign up for my free newsletter at stockhacker.com and you'll receive a link to download my one-button stock screener for free.